Good morning, everyone. I'm Kevin Hincks, and this is the Daily Trader with Kevin Hincks for Thursday. Feels like a Monday, but it's the first trading day of the year. And let's talk about two key names I think that will set the tone for 2024. That's what we're talking about today. Tesla and Boeing. Two names to look at for 2025 as we get into the new trading year. First and foremost, let's get to Tesla. Now, this morning, Tesla came out with much anticipated deliveries. They were looking for between 504 and 507,000 cars delivered for the fourth quarter. It came in about 495,500 deliveries, slightly missing 484,500 a year ago, so higher than last year, but not as high as the 507 expected. Now, that brings the total for 2024 to 1.79 million cars, slightly lower than a year ago, the first drop in 10 years in terms of cars delivered. So, what is that doing for Tesla? Remember, it came off this huge rally at the end of the year and post-election. Now, Tesla is moving lower today. It's currently down, 6.7%, about $26 going into midday here on the trading day. So how do we look at this? What has fundamentally changed? No one should be surprised that 2024 was a difficult year for the EV companies, right? Elon Musk was competing with price, not necessarily other parts of EVs. And BYD out of China is heavily competing. And it seems like prices are coming down and margins are coming down and there's a lot of competition. Yet, Elon Musk still delivered 1.79 million vehicles. And like I said, fourth quarter, 495,000 versus 484 last year, but lower than the expectations were of about 507. So, how do we look at a stock that's down, 6.5%, about $26? Well, because nothing has fundamentally changed about this company, we're going to start looking at a stock that is, significantly off. Remember, it traded $488. Now it's $378. It's $110 off its recent high. Now, some of the spike was probably some of this sell-off, some of the corrections probably warranted. So now how do we look for, now that it's $100 off its high? Well, let's start looking at it in terms of a diagonal. We're going to play the long-term play here and look at the paper money trade. The practice trade we looked at was going out to the Jan 31st expiration, buying the 390 call. Now, the stock has moved since we put this trade in. You're going to see that in a moment when you see the debit. But you can see it's $26.75 there. Current price now, about $23.50. So it's lower than where it was and moving away from that strike. But I put in the 390 call, buying the January 1st 390 call, selling next week's $420 call. Think about this. Here's the most important part of our lesson today. The expected move for next week, about $29.50. That's how you use strike selection, using the Thinkorswim platform and setting up your call diagonal if that's the bullish play you want to put on in Tesla. So think of a 30-point move. Now, could it be the 380, 410? Yeah, now it could. It certainly could, right? The stock is significantly lower than where it was an hour ago. It's traded low. It's traded down as low as 373 today. But so in terms of putting the spread on, I put it in $26.75. It's currently trading about $23.50. That debit is the risk on this trade. You're looking for a move on this trade up towards 420. But as a trader, as someone who uses options a lot, this is a chance to adjust your strikes if you haven't put anything in yet. Remember, it's the most important thing is to look at the duration of the long option and look at the expected move of the duration of the short option that you're using. And using that right-hand column on the Thinkorswim platform, it's about $29.5. So that sets up the width of the diagonal that you're putting on. The risk, like I said, is the debit paid. You can adjust the strikes, but the most important part is if you look at the delta on this trade, we'll reset our slices here and check them out. The delta is about 34.5 deltas. It's actually paying a little bit of theta because the stock has moved away, but this is one that sets up for a move back up towards the 420 strike. Again, the strategy of buying the dip on this trade and looking at a recovery. If you don't think it's going to happen, remember, at the end of the year, a lot of our shows were talking about big movement expected. We were doing long iron condors in Tesla. That can still be a viable strategy if you think the stock may move big ways in either direction. Some of those moves have already happened that we're seeing them. So our first trade of the day, a long call diagonal in Tesla. Now let's go to our second trade of the day, and that is Boeing. Now, interesting, Boeing was higher earlier in the day, now is down 2%. Today's news, Deutsche Bank maintains a buy on Boeing, puts a price target out of $215. They think that the overall problems are mostly behind Boeing, like 737 MAX issues, 787 supply chain, the production strikes that are solved. Boeing has raised capital, new CEO from an engineering background. There's a lot of positive news catalysts going on in Boeing, but the recent plane that skidded off the runway. Now, that was a plane made in 2009 by Boeing that landed safely and then skidded off the runway and hit a retaining wall. Now their question is it's not Boeing's fault, and they're looking at the proximity of the barrier to the runway. So it looks like there's a lot of different issues that is going to come out where it's not Boeing's fault. Now, the stock traded down big, the day of that plane incident. So again, the stock's down today on an upgrade by Deutsche Bank. Another trade we looked at, similar makeup, the call diagonal, buying the 170 call January 24th on our paper money trade and selling the January 10th 177.5. So a $7.50 call diagonal. I put it in about at 625. It's currently trading about 585. So again, a little bit lower as these stocks have come off their recent rally. But like I said, Boeing at one point today traded as high as $179. Now it's trading about $173. So pretty significantly off its highs when the market was up this morning. But again, with the diagonal, the debit paid, if it's $6.25, if it's closer to $6 where it looks like it's trading now, that's the risk on the trade. The break even is up near, it looks like right now, I'll set prices to break even. It looks like about $172.22 is where this trade breaks even. You're looking for a move back up towards that 177.5 strike. Like I said, traded 179 this morning before selling off. And so you're collecting a little theta here on this trade. Your delta is about a 28.5 delta on this trade. So again, this is checking that January 10th expiration, just like we did for the Tesla trade, about $7.50. There it is. You line up that strike and you line up the short strike right at the 177.5. Now, you could lower this net debit by choosing maybe the 175 strike. If going out to the January 24th expiration, they don't have 172.5, that would be perfect for where we are now. So it's either the 170 or the 175. But again, in terms of the expected move for the week, looking at the 177.5 as our strike. Could you move that to 180? Yeah, of course you could, right? Set those strikes. It's the strategy that we're looking at here, the longer delta in the calendar spread family. So our two trades for today, call diagonal, buying the dip in Tesla with the risk on both trades. The other call diagonal in Boeing, the risk on both trades being the debit paid. That's our show for today. Happy New Year, everyone. We'll see you tomorrow with another edition of Daily Trader. I'm Kevin Hincks.